his dreams, mascara smears. Matt's crying in the shower, drowning his tears. A broken heart, a shattered soul. He's all alone, feeling so cold. Mississippi failures blasting his brain, echoing his pain, driving him insane. The water falls down his face, it drips as he crumbles, broken into shit. Black clothes soaked, his heart in flames. Matt's crying in the shower, playing the blame game. Tattoos hide the scars upon his skin, but the hurt inside still burns within. Matt Kohrs is crying in the shower, crying in the shower. Matt Kohrs is crying in the shower, crying in the shower. Wiping off the water, taking a deep breath in. Gotta shake off the sorrow, let a brand new day begin. No more crying in the shower, it's time to stand up tall. Feel the warmth and shit, embrace it one and all. Picking myself back up, no more tears in the water. Gonna burn so bright like blood red chemicals. I'm breaking free from the bullshit, leaving them behind. No more crying in the shower, it's my time to shine. Matt Kohrs is crying in the shower, crying in the shower. Matt Kohrs is crying in the shower, crying in the shower, crying in the shower. Matty Ice voice echoes through his brain, chasing fortunes but he's running from the pain. Street lights flicker like the thoughts he can't shake, riding through the dark but it's all a mistake. Tears fall silent but they speak so loud, carrying burdens but he's lost in the crowd. The mirror is cracked but it won't tell him why. Matt's been here before, just another lie. Matt Kohrs is crying in the shower, crying in the shower. Matt Kohrs is crying in the shower, crying in the shower, crying in the shower. Matt Kohrs is crying in the shower, crying in the shower. Matt Kohrs is crying in the shower, crying in the shower, crying in the shower. Quit crying, Matt.
Oh, brother, oh, brother, oh, brother. Good morning, good morning, good morning. We are back at it again, Daniel, with a beautiful Monday, March the 31st, the start of a new week, but the end of a month. And this isn't a normal Monday. This isn't a normal conclusion to the end of the month. This is the end of a quarter, which is very important because of the JP Morgan position that we've been droning on about forever. And if you had spent any time whatsoever over the weekend looking at FinTwit, if you will, everyone's just talking about this JP Morgan position, and it's for good reason. The strike price is 5,565. It is a bunch of long puts, and it's just under 40,000 contracts. It is absolutely dominant. And like I said, JP Morgan has long puts, so it's quite a bit of negative delta negative gamma. And I'm going to show this all to you, but we're going to be here for a wild day. We are going to be here for a wild day. Obviously, we're opening up right now in a pretty red territory. I mean, things are looking a little bit spooky right here. The SPY gapping down, the Qs gapping down, volatility gapping up. We have Bitcoin getting hit over the weekend. Some of the equities we've been tracking, huge gap downs. Tesla's getting hit. MSTR picking up a little bit. Sailor had some news. But across the board, it is red. It is a bloodbath. Everything I'm paying attention to is deeply in the red territory, except for basically volatility. Volatility is the only thing I see going up right now. So we have quite a trading session ahead of us. So here's the game plan. I'm going to be breaking down some of the news over the weekend, and then obviously I want to spend most of the time prepping you guys not only for the day but for the remainder of the week, because we have the JP Morgan position today. We already have tariff talk. We know Liberation Day is Wednesday. We have some employment data coming out throughout the week, with the biggest one being on Friday. That's the unemployment, but we're going to get JOLTS. We're going to get ADP. We're going to have a giant JP, like the position's going to roll, so we're going to find out what that is. There's so much going on. It's times like now that it's just killer to be a trader. These are the types of environments and days that traders look for, because man, oh man, are the odds of a large move, they are high. So if you can get on the right side of that move, whew, it can pay. So I hope you guys had a good weekend. I hope it was fun, relaxing. Finally here in New York, we got at least a little bit of warm weather. So things are improving very much. I can feel the seasonal depression leaving my system. So I'm very excited for that. But hope you guys got a lot of rest, and I hope you guys are ready for another wild week of trading. We have so many things to go over. Of course, I'll be giving you the breakdown of the key things, and then on a daily basis, you guys know I'm putting out the daily update videos. You know we have the newsletter. You know we're in the Discord. So if you ever need more info, obviously it's not that hard to track it down. But let's get rocking on the day. Let's get rocking. Obviously, you can see the SPY currently gapping down by 0.9%. The Qs are gapping down by 1.27. You can see things are just getting beat up. Tesla's down by 5.9. You have MSTR down by 2.3. I mean, you just go down the list and things are just getting brutalized. Palantir's down by 7%. Palantir's getting murked. You have Meta down by 1.7. This is brutal. It's going to be one of those days. And I guess before we get into it, if you guys have short attention spans and you need a TLDR, I actually think that there's a pretty decent chance of a 0 DTE bear trap being set because of the JP Morgan position. So if you're coming in right now and you're like, okay, I see things are gapping down, there's a lot of pandemonium and chaos and everyone's saying bearish, 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 bearish. Yeah, that's how things are looking this morning. But I just want to throw it out there that the last time we saw a giant options position roll due to the required hedging, we actually saw a giant intraday. It was midday. It was around 2 p.m. A giant sell-off that then led to an even bigger rally. So I'm expecting quite a bit of range today. Obviously, my initial bias is on the bearish side because the options chain is put dominated. We're below the EMAs. There's just a lot of negative sentiment. So I think there's good reason in the short term as of right now before the market opens to be like, yeah, the bears are in control. But I don't want you guys going into today thinking that you could just blindly be bearish and just keep selling and selling and selling and aggressively betting on the downside. Of course, it might turn out to be one of those days, but there is a very real probability, obviously not a guarantee. Remember, when you approach the market, you want to think about it as like a tree root system, and every single root has a different percentage probability of it playing out. There's a very real root system today of some bearishness, extreme bearishness, that then the late bears to the game get caught and we end up seeing a big pump to the upside. So I just want to put that out there as something you got to pay attention to, because it's all going to relate to the options rolling. So I'm going to spend more time on that right near market open, because I do think it's going to be pivotal on the day. But there are other things we should first talk about. Dow futures dropped 200 points as jittery Wall Street awaits the Liberation Day. Liberation Day is not tomorrow. It is Wednesday, April 2nd. That's when we're going to be finding out more information of what the next chapter of this trade war is going to be. But even according to people, sources familiar with the matter, which, I mean, one of these days I'm going to be one of those sources, it sounds like they're still actively trying to figure it out. So a lot of things not ironed out right now. Trump vents anger at Putin over Ukraine, hints at oil curbs. So kind of related to the chaos right now, but over the weekend on Air Force One, Trump was interviewed, and among many things that he was talking about, he got really, quote unquote, pissed off that Trump got pissed off that Putin was saying Zelensky doesn't have credibility to like make the deal, and it angered him. And then it actually got to the point where he might end up kind of messing with the old oil supply. Oil edges up as traders weigh Trump's threat on Russia tariffs. Once again, just tariffing the oil, and obviously driving oil prices higher. Not long ago, trading at 65 a barrel, getting pumped up to about 70 a barrel. And it's been on a good 2 to 3 week move right back up to the EMA cloud. So for my energy traders, this is something definitely worthwhile to pay attention to. Like I said, just some news over the weekend, but really I want to spend most of the time talking about what's going on in the equities market. stocks extend plunge with deepening tariff fears. So this is going to be the major headline. And I know we always do this, but I think it's that important. So yes, this is something to pay attention to, but don't forget about seasonality. Remember, April is historically, as in over the last 3 decades, one of the most bullish months on the calendar, really mid-March to the end of April. Obviously, you see how March played out this time around, but it is good to know seasonality. Are you being supported by tailwinds or are you running into headwinds? So over the last 5 years, you can see April right here, the month we're about to go into, it does favor the bulls. So not only over the past 30 years, but the stat is also true over the past 5. And if you look at the weekly view, this particular week, once again, over the past 5 years, does slightly favor the bears, but it's next week that from a seasonal perspective does favor the bulls. So I just quickly wanted to share that. But obviously, this week, are we bullish or are we bearish? Well, it relates to all the crazy news. So today, Chicago PMI, we're getting that 15 minutes into the trading session. So you might want to wait on your trades for at least those first 15 minutes to pass. And then also the big thing of the day is the JP Morgan position. I know I keep referring to it, but just to show you how wild it is. So this is it. You could see the one dominant position of the day right here is long puts at 5565. There's about 37,000 of them. This is the JP Morgan put side of the collar position. We don't really have to spend much time on it, but for those of you who don't know what a collar is, it's when you buy the underlying, you sell calls, and you take that premium from the sold calls against your core position, kind of like a covered call thing, and then you use that premium to buy the downside protection. So you put a ceiling on your gains, but you also get free downside protection. So this is the downside protection. Like these are long puts. So anyway, that is going to be rolling off today. And that's a big position because at some point throughout the day, really will be definitively sure by the end of the day. But we're going to see where they're going to be rolling to in June. I believe June 30th will be the next strike that they're paying attention to. They don't do it on the like the financial, really the options monthlies. They literally play like the last calendar date of the month. I don't know why they don't pick the monthlies. I guess they just want to make weird problems for themselves. I don't know why they do that. I don't know why they just don't pick the proper monthly where there's already a lot more liquidity and open interest, but for whatever reason, they literally pick the last strike of whatever that month is. So they're more so doing the end of the calendar quarter rather than the like fiscal quarter type of a deal, at least according to options market. But anyway, this position dies today. They're not going to be taking this one off. They're going to let it go wherever it goes. What's going to be interesting is the new position that they create, and the really interesting thing is going to be how the dealers end up hedging those flows. And the last time this all happened, it got crazy. So that's on dock for today. Then tomorrow we get some ISM numbers and JOLTS job openings. We're finding about how strong the labor market is. Then Wednesday, not only do we get the ADP non-farm employment change numbers, but that's going to be quote unquote liberation day. Then Thursday, we get more of a data drop. And then on Friday, we get not only the unemployment report, but also Chair Powell will be speaking around 11:30. So this week is going to be absolutely wild. I hope you got some rest. So that brings us back to kind of the current tensions, the uncertainty surrounding what's happening with tariffs. So this is Nick Tamaros from the Wall Street Journal. Trump officials still aren't sure what they're doing with tariffs this week. In recent days, advisors have considered imposing global tariffs of up to 20% that would hit virtually all U.S. trading partners. So kind of weird that we're heading into Liberation Day, 2 days out, and even the whole team's kind of like, what the hell are we doing? He wrote this article here. Trump team weighs broader, higher tariffs back on the table ahead of Wednesday's deadline, and across the board hike of up to 20%. This is wild. Breaking: President Trump team is weighing broader and higher tariffs ahead of the Wednesday reciprocal tariffs deadline. President Trump is reportedly weighing an across-the-board hike of up to 20%. Again, April 2nd is not the end of tariff uncertainty. I know over the past month, every other word out of my mouth is that word uncertainty, but that's what's currently driving the market. When there's more uncertainty, the market's getting hit. When things get clarified, we start to pump. So right now, as uncertainty is in the system, especially if it's growing, look for the market to go lower and lower and lower. But to be fair, this week, we might remove a lot of the uncertainty. Right now, anyone generically telling you, hey, I'm confident, you should be bearish or you should be bullish this week, they have no fucking clue what they're talking about. This is a binary situation where we're just waiting to see what does or doesn't happen Wednesday. Are things clarified? Great. If so, rally. If they're not clarified, and if things get even more extreme, look for a continuation to the downside. It's that easy. I see too many people digging their heels into the ground and they're saying, no, this has to be bullish. No, this has to be bearish. Folks, the market doesn't have to do shit. It does not have to do anything. Like, this idea of something being guaranteed is absolutely preposterous. It is beyond silly, and really it's just a great recipe for you to lose money in your trading account. Play this info as it comes in. Pay attention to the news. Pay attention to the options flow. Pay attention to where the big money is really setting up. Are they yet betting on a rally? Are they betting on a continuation to the downside? How is it changing from day to day? This idea that people come in and they just fire from the hip and they're like, all right, it has to go that way. And like, they never take in new information from the point of placing the trade. It's just so silly. It's absolutely silly. So folks, I'm telling you, day over day, take it in stride. If you like a setup, if you think the risk to reward is optimal, if you think it's with trend of the news, the options flow, the overall price action, great. Take a low risk, high reward opportunity, but don't just stop there. Right when you put the trade on, the game's not over at that point. Just pay attention. Keep paying attention. Is everything still aligning with your reasoning for the change? Because if so, great, stay in the trade. But if it's changing, at a certain point, you have to be like, oh, okay, you read this situation wrong, and maybe it's time to pull the ripcord. You want to be on your toes. Obviously, another aspect of uncertainty is the fact that gold hit a new all-time high. So to all my gold bugs in here, massive congrats to you. And we could even see on a global scale how crazy this is getting. This is a snapshot of what was going on in Japan's equivalent of our S&P 500, but it's for their economy, their overall market. You could just see getting absolutely nuked. Japan's stock market falls nearly 4% as investors prepare for President Trump's Liberation Day. So this was happening probably as we should have all been sleeping, but in reality, we were all just feverishly checking the futures market. It was getting absolutely dumped on. Trump's reciprocal tariff set to start with all countries. So this is probably the biggest change from last week when we spoke to now. President Donald Trump plans to start with reciprocal tariffs push on quote-unquote all countries. Obviously, ratcheting up the intensity there. Trump's tariffs are set to be unveiled on April 2nd and will aim to rebalance global trade and boost U.S. manufacturing. You know, I had to talk with the team about this. I haven't really thought about it. We might have to do an all-day stream on Wednesday. I don't know what the schedule is for Trump. I don't know if there's a set time or if things are going to be coming out randomly or if they're going to be coming out at different events throughout the day. I don't know what the president's schedule is going to be on Wednesday. I don't know what the schedule is for these announcements. Is it one big thing or is it just going to be dribs and drabs throughout the day? So I'm going to have to look into that today. And obviously, if you guys know right off the top of your head, feel free to let me know. But there is now, I'm just thinking about this live with all of you. We might have to do like an all day thing. So I'm going to have to check out a schedule and see what the plan is. Right now, first quarter GDP growth will be just 0.3% as tariffs stoke stagflation conditions. Remember, stagflation, inflation ripping, economy declining. Right now, some of the numbers are not so bueno. I do want to remind you, this is kind of what happened in 2018. You just have to adjust it by a couple months earlier. But in 2018, Trump did this. It came on very, very strong. And then right as we were getting up to the deadline, guess what? The trading partners gave him what we want. And then we just had a gigantic blistering rally. I still do believe that the ending of this situation is a massive push to the upside. We just kind of have to kind of white knuckle it through the craziness right now. But before you know it, there's going to be things leaked to the press and saying, oh, okay, they came to this deal, that country came to this deal. This isn't one of these things. I truly don't think it's going to be sitting there forever. I would be really, really surprised. Of course, it might happen, but I'd be really surprised if the current situation related to tariffs lasts longer than this month. I think there's going to be a lot figured out and solved, and a lot of the uncertainty is going to be removed in the month of April. I don't think we get to May still on the edge of our seat saying, what's going on with tariffs? What's happening there? I just don't think we're going to get to that point. If anything, I think we're going to get a lot of things answered this week, not everything. And then as April progresses, we're going to find out more and more and more. And as we remove the uncertainty from the system, I think that's going to be the prime time for things to pop. I do agree with a little bit of what Tom Lee had to say here. Not everything, because Tom Lee has basically been saying bullish, nonstop forever. Obviously, for the month of March, really mid-Feb to about now, you wanted to be pretty bearish, and he keeps calling it for higher and higher and higher. But judging, once we can remove this crazy JPM put position from the market, take that gamma and delta out of the system, there is a chance that we could see the options structure repurpose itself and all of a sudden be constructive, and actually we start to see that climb to the upside. So I've been calling this out since mid-March of saying, hey, I truly believe somewhere between the March monthlies and the start of April, referring to Liberation Day, that the bottom is somewhere roughly in this time. It's very, very difficult to pinpoint the exact day. It's very difficult to pinpoint the exact point within that day. But this range between the March monthly expirations and Liberation Day, we'll just generically call it this week, I truly think somewhere in here is going to be the bottom in the short term for a pretty nice Vanna-fueled rally back up to the upside. With respect to SPX, I wouldn't be surprised if we talk about 59.50, maybe even all the way back up to 6,000. A new all-time high on the rally. I'm not really sold on that, just saying, but who knows? I need to see the options market and see how it starts to repair itself after this particular day and this particular week. But anyway, Tom Lee, pretty much as bullish as ever.
Fundstrat and Chief Investment Officer of Fundstrat Capital, as well as a CNBC contributor. At the time, I think you were talking about some of the people that work in your shop, too, some of the technical people, and you were of the view that we were at least close to making a bottom. And off camera, we were talking, I said, maybe in terms of timing, it was about a month early, but in terms of how far the markets actually went down, you're not off by that much. I think the S&P was down about 6%. It's now, looks like it's going to be, if it opens where it is right now, it'll be in correction territory again, down 10. But you have the same kind of feeling for this week that some of the underpinnings are in for a real bottom, for a tradable bottom or a real bottom?
Yeah, I mean, both. I mean, obviously it doesn't feel this way because over the weekend futures came under pressure, but we know markets are really oversold. We know that investors have had a lot of de-risking. And this week, I think into April 2nd, investors have three things on their minds. One is they just don't know what the tariffs look like. They don't know if it's going to damage the economy. And I think third, many are just a little terrified of the policies of the White House. But post-Wednesday, I think markets are going to have some visibility, and that allows us to take some of the selling pressure off. So, yes, I think it's possible that instead of us breaking down here and seeing markets under further pressure, we're actually got the right pieces
buy,
for
though,
bottom.
into this without knowing what's on the other side of it?
No, you just wait.
That is the fundamental question that people are sitting around trying to figure out today and tomorrow.
That's right. It's an interminable wait for people because it is still 3 days, and they're fearful that we could have 3 days of down 2%. But I kind of agree with Larry Fink. I think the U.S. is going to come out of this okay. I mean, Brexit's an example. Brexit happened, and the U.K. economy emerged okay. It didn't have a huge recession, and the stock market did okay. So for investors today, over the weekend, we had so many thinking the economy is going to completely fall off the rails after Wednesday.
Well, people are starting to say slowing growth and persistent inflation. So you put those together, and you get the stagflation. Yeah, that's death for.
Yeah, I mean, there's a lot of distortions of the economy now, right? Because we know people are buying cars and wine ahead of tariffs, and that's creating inflation.
Hopefully, they're not doing it the same, cars and the wine.
Do you think it's pushing up our growth numbers that we're seeing at this point, between retail sales and other places, or is it too small to distort things on that great of a level?
I think it's possible economists are only dialing in the negative consequences so far, but not the positive, because rates are down and gasoline's down, and there could be some pull forward of demand. So we might end up having better growth, so less stag, and maybe the inflation stuff is more distorting, and so it's not as stagflationary.
You've had some of your recent calls that turned out to be prescient, bullish calls had to do with inflation not being as bad as people feared. Is that still what you think? Because some of the numbers have have at least given a head fake that maybe it's still around, and you throw in tariffs. We just heard what Goldman Sachs say, a 0.5 point higher on the PCE than they thought previously, and 3.5 on the PCE is not
Looks
going
like
to
you had
allow
a
the
special
Fed
K this morning.
to relax.
Jesus.
I mean, yeah, it's interesting because Goldman did raise their inflation forecast, but then they're talking about more rate cuts.
I know, which is because of growth concerns. I would
Yes. And I think we'll have a glimpse of what
Risk
Fed
reward
Chair
is
Powell's
effective
thinking
here
because
due
he's
to the
speaking
anxiety over the
Friday
economy
after the
markets
jobs
of
report.
tariff.
And I do think that it remains a more dovish Fed than many expect. I mean, I think that's what was revealed after the March FOMC meeting. And not that I'm saying it's going to...
We expect stocks to rebound sharply, more like a V-shaped bounce.
necessarily
I
a
fully agree
reversal
with
of
that.
markets here, but I
Fully
think
agree.
investors
I think there
are
could be
a little
pain
too
in the
scared
first half
heading
of
into
this
winter.
week.
Bitcoin's testing recent
More whipsaw than
near-term
anything.
lows.
But I think by the
guess
time we're
again,
talking
it's been
about the
under
first
80.
full week of
It's not
April,
quite
dude,
there yet.
I really think the bulls are going to step up.
It definitely is a risk-off trade, and when the Nasdaq goes down, Bitcoin seems to go down. But it also really likes the idea of more Fed rate cuts or the Fed being more lenient. So if we get that on Friday, is this a decent time to be stacking?
I think so.
You do at 80.
I agree. That's pretty much the end. It wasn't that all that interesting past it, but I really do right now. The generic fear that is clearly in this system, I think this is the time where I don't know, like the Warren Buffett thing of be greedy when others are being fearful. It very much is true, but remember, just because things are bad, you could have argued, well, it was bad a week ago. Like, was that the right time? Like, things, of course, could always get worse. So I'm just saying, maybe when everyone's screaming bearish and doomsday, that is your first inkling to say, okay, I'm interested in buying. But then you just wait for the other things to align for you to get in, ideally low risk, and you want to really see that options market turn around. Just very quickly with it, remember, this isn't a time to be scared whatsoever, because in reality, it's in these large moves and the spikes in volatility that you can make a lot of money. For retail traders, for active traders, this is actually the environment you make the most money in. I want to be very, very clear about this. As much as people say like bloodbath and that type of a thing, I wouldn't associate that in my brain with something that's negative. It is if you're just an investor and you're not prepared for these types of things, but as a retail trader, these are the times that you make a shitload of money. So when we talk about being very bearish, bloodbath, all those types of things like stocks plummet, it's not a bad thing if you're a trader. If you know what you're doing, you're actually going to make more money in these environments than you will in the bullish market, because in bullish markets, it's a slow grind to the upside. So yeah, you can make money and whatever, everyone in their investments accounts is happy, but it's on these huge sell-offs that the active traders, whether it's via futures or options or leverage perps, whatever it is, it's where you make a shitload of money. So for example, yesterday on Friday, $80,000 in this account. I still have some running. So like with it, like, I guess, I don't know. I see a lot of doomsday, so I kind of want to just like calm people down and remember, this is a great opportunity. If you look at my year-to-date return, currently up $270,000, because the market was choppy in January and February, I didn't really do anything. I didn't do well. And then from Feb 7 until now, so from mid-Feb, when volatility started to pick up until this very moment, that's exactly how I have a 300% year-to-date return, up about a net 270. So with it, I guess I'm showing you this to obviously give you a little bit of a humble brag, but to get these numbers, 151%, 149%, 29%, to get those kind of numbers, you need vol going crazy. So I see a lot of people like screaming like, this is horrible. Like, what are we going to be doing? Like, how, blah, blah, blah. Dude, if you know what you're doing, you could actually make a shitload of money. So please don't be scared of it. Just be prepared. Like, think of your long-term investment account and your active trading account as two distinct, unrelated things. And in the long-term investment account, who cares about what's happening day to day? You're looking 10, 20, 30 years out. So don't care about it. As things get really, really bad, that's when you add on. Don't add on when it's ripping to the upside. You want to be adding on when everyone's freaking out. And then with respect to your active trading account, this is what we're doing here. You take in the news, you pay attention to options, you pay attention to the key levels, you pay attention to the key updates, you look for the optimal reward to risk situations, and you just fire over and over and over again. And eventually, with the optimal sizing and risk to reward, your account is going to grind and grind and grind. So that's what I've been doing. That's what a lot of you have been doing. That's what the Discord has been doing, and it's been crushing. Of course, if you want this stuff in real time, that's what the Discord is for. Sign up for Locals, mattkohrs.locals.com. Become a supporter. Membership is free. With the free membership, you still get the newsletter where I break down the previous week, the earnings, all the major macroeconomic events, the seasonality. I do want to let you know that historically, today's very bullish. Over the past 27 years, the bulls have won this day 70% of the time. And I know that's a crazy thing to say because I see pre-market with you guys, but hey, seasonality is seasonality, and it's not a guarantee. Obviously the Bears win 3 out of 10 times while the Bulls win 7 out of 10 times, and this is almost 30 years worth of data. But the profit factor, this is a look at the hypothetical equity curve you would have if you bought it open, sold at close on this individual day. So not only because of seasonality, but also because of what happens when JP Morgan creates their new position. Don't be surprised if we see large intraday swings. And I'm not talking just to the upside or to the downside. I'm talking about one happening and then a reversal from that. So we're sitting there like, whoa, the market's ripping. Don't be surprised if right after we have a larger drop or vice versa. Don't be surprised if at some point today we see a huge market hit and then just a crazy V-shaped recovery right off of it. That is what is like. None of this shit's ever guaranteed, but there's a high probability of those, whether it's a normal V or an upside down V. But I'm saying be prepared for large moves today, large moves that they get reversed in an even bigger fashion because of the hedging that's going to have to happen. So putting that together, the fact that we're pretty bearish right now, and then also knowing that seasonality is bullish. Like, I'm just saying, don't be married to one position or another. If you're in a position and then it goes a decent way in your favor, please, I beg of you, set your stop to break even. Don't take on risk. Get a free lottery ticket. It's like, truly, in my opinion, it's the best way to engage in these types of markets where you get a free lotto play. You get into a play, you get lucky, you're fortunate, it goes a bit in your favor. When it goes comfortably in your favor, cool. Set that break to stop. Like, set the stop to break even. If it goes against you, whatever. It was break even. You got a free lottery ticket. And then if it keeps trending in your way, even better. You did it with minimal risk. To survive these environments, it's always about, can you minimize your risk? Good traders are not good traders. What they really are very good losers, as in they're very good at controlling their risk. They let the reward, they let the profits, they let those runners take care of themselves, and they let them go and go and go, while they are hyper focused on anything potentially going against them. It's always who can control their risk the most that ends up winning this game. And on that particular note, dingity ding ding ding, the world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. Obviously, we are opening up with about a 1% gap down. That's not so good. How are the accounts doing over here? Yeah, look at that gap. So we clearly have an upside gap fill all the way up to 5572. Today's high, oh, geez, it's 27. So there's about a 40-point gap. We are pretty much right at this low value. So we're at 5520. This low from mid-March, March 13th, is 5504. So pay attention to that. Obviously, these are the key levels of the day. They're kind of messed up. You have the high and the low and the close, and this is getting all sorts of messed up. Hang on. Right here. The red, the green, and the white is the low, the high, and the close of the previous session. But what I want to bring your attention to is this 5565. That's the JP Morgan position. That is the strike. Then we have this low from mid-March, March 13th, 5504. And then there's a huge amount of open interest at 5,500. So pay attention to that. If we do break below this, maybe 5,450, but I do want to show you this little ditty over here. There's not much action below. At 5,500, you can see there's huge action at 5,565, but we're already below that. There's a note here at 5,500, but I could even show you, if you expand this range, there's nothing really going on. there's not many players down below 5,500. There is the spike at 5,400. So I guess theoretically, maybe nothing catches it and we do keep going. Of course, that's possible. But I just want to let you know, it's not like big players are coming in saying, yes, drop and drop and drop and drop. If in reality, there's just not much action down there. This is the volume overnight. Yes, more puts are being played than calls. I do see the spike at 5,400. But remember, the spike in magnitude really isn't that high. So it seems like we have some very deep protection. And of course, that's in the cards for today. No one's really playing calls at the moment. Of course, can update at any point. But I guess my main point here is watch 5,500. Watch this low, watch 5,500. This is going to be a big old support level. Maybe we bounce, maybe we break. Anyone that is telling you they have some sort of model that predicts do you bounce or break, they're so full of shit. They have no fucking clue what they're talking about. Whenever the real key to trading here truly is just this: identify the key levels and then wait to see how the market reacts at those key levels. Don't try to predict. Don't sit there right now and say, yes, we're going to come down here and we're going to bounce. On the same side, if you're bearish, don't say, oh, we're going to come down here and then we're going to crack. All you have to do is say, this is the key level, and then you sit there and you watch. Are we going to break down, or there's too many people trying to predict this event of do we bounce or do we break? That's not what good traders do. What good traders do is say, this is an important level. I want to see how big money reacts to it. And when I see that reaction, can I take advantage of it with a low risk trade setup? And obviously in this case, for the bullish side, you look for that bounce and your risk would be whatever the low is. And if you make a fresh low, just admit you're wrong. And then on the flip side, if you're trying to be bearish, well, right now your risk is kind of shitty because all we really have to risk off is the intraday high, which is just like not much to go off of. So with it just requires a lot of patience. But this idea of like trying to predict what's going to be going on, it's a silly way to do it. It is a very, very silly way to do it. So remember, we do have a report at 9:45, but more importantly than that, patience is going to pay. And actually on that note, as we're letting the market kind of open up, shout out to Public. Public is today's partner. We've been partnered up with them for over a year. Folks, I am telling you, this is the place to trade options. If you're an option trader or an aspiring option trader, this is the best brokerage, in my humble opinion, that you can be on. It is free to download. It is free to sign up. They don't engage in payment for order flow when trading stocks, if that's a thing that concerns you. They have crypto trading. They have a high yield account. They have retirement accounts, but specific to options. Why this is the best place to trade options: there are no commission fees. There are no per contract fees, and you get rebates every single time you trade a contract. When you buy it, when you sell it, 2x the rebates. Doesn't matter if it's calls or puts. Doesn't matter if it's complex strategies like condors and butterflies. Every single options contract that you trade, whether you're buying it or selling it, you are going to be getting a rebate. There is no other brokerage on this planet that pays you a rebate every single time you trade an options contract. By that alone, you should be here, because no matter where you are in your options career, if you're profitable, you'll be more profitable because of the rebates. Unfortunately, if you're losing, well, it'll be less painful because, once again, because of the rebates. That is exactly why I trust them with my money. That's why I'm on them. And to the tune of, I made another 55K today. I'm trusting them with almost $500,000. And actually, year to date, this is just crushing them up 324. But you can see this jump 54. This is why I'm on Public. Not only am I partnered up with them, but I'm partnered up with them for good fucking, dude, Jesus Christ, 50K, 21K, 13K, 13K. Folks, there is a reason why I'm trading on this brokerage day in and day out. And the answer is because there's simply not a better option. This is the place to trade options. Check it out. Pinned to the top of chat, in the description of the video. My mods will drop it in chat. Get onto Public and make sure you use that link, because there are different rebate tiers. So to start off at a higher tier, you're going to want to use that link. So don't just simply go and download it. Well, I guess you theoretically could. But if you want to start at a higher rebate tier, as in start earning more money more rapidly when you're trading options, make sure you are using that link pinned to the top of chat. It's in the description of the video, and my mod will be putting it in chat literally as we speak. Potential bounce right here. So we just made a fresh low. We broke that low from March 13th. We didn't tag 5,500. So we got a little bit of a puke right down here. A little bit of a recovery. Let's see if it wants to give us a secondary test. Maybe it wants to do a double bottom. Maybe this is a little dead cat bounce and we puke anyway. Regardless, I really don't think chasing this is just too early in the day. We know that there's a report coming out at 9:45 all the way over here. So patience. Let's go to the 5 second. Let's see what in the world's going on. Pretty much a puke until 9:34, and then now options picking up. More specifically, we had people buying puts, and now they're covering those puts. So there's quite a bit of zero DTE put trading going on right now, and I don't expect that trend to be changing at all today. Looking at the Mag 7, same thing. A puke until about 9:34, and then since then picking up. Let's just see. This might be the start of that V-shaped reversal, or this could easily be a dead cat. There's no way to definitively know, so just wait. Just be patient. You don't have to rush anything. On days like today, there's going to be so much fucking opportunity that you really don't have to get into a play you don't love, because if you just have that patience to wait for like that setup, there's a good odds that you're going to be finding that at some point. Like if you can just be patient and wait for your perfect A+ setup, there's a very, very high likelihood that it's going to be appearing at some point in the day. So if you're seeing something that's kind of interesting, but you're like, I don't like, it's not like everything's aligning for you, then just wait. Just have that ability to wait, because at any point we could see like ripping recoveries, or we can see just absolute capitulations. So it's always just a game of, can you take as many shots as possible? And the way to optimize the amount of shots is by basically just saying, oh, okay, I'll just take on minimal risk. Remember, it's always going to be the people who get into the trades time and time again with the most minimal risk time and time again that are going to survive like the marathon that is trading. The 5 minute, 10 minute, 30 minute, 4 hour are all bearish. 5 minute, 10 minute, 30 minute, 4 hour are all bearish. Obviously, the option chain, I mean, I think this goes without saying, but the option chain is clearly put dominated, and it's just because of this JP Morgan position. I could zoom in a little bit here, just you're going to like kind of lose the sizing of that. But just to get a little bit more clarity, yeah, you do have some action at 5,500. You do have some action seemingly around 5,470. And then there's a lot of action right now down here at 5,400, at least on a relative basis. But to be clear, still clearly the dominant position is this JP Morgan put position at, it's about 37,000 contracts, and it's at 5,565. Obviously, it expires today. I'm on the 0DT net open interest. When it does expire, or throughout the day today, last time it happened about midday, but they're going to be creating an entirely new position, which is interesting in itself to see how they're positioning. But the really interesting thing is how are the market makers going to be hedging the execution of that new position, because it is large. Jamie, welcome. You're an astronaut. Shout out, man. And Sandman, shout out to you. So right here, this is just a patience play. Obviously, if you're in the Discord, I'll be updating you when I change my swingers. You know that I locked in some profit. I locked in about 50K right when market was closing on Friday, swinging another 50K. And I don't mind it at all. Obviously, it gapped in my favor, but you never know. It could have easily gapped against me. So I still think it was a smart play for me to lock in what I did. Oh, I'm seeing a nice trade setup now, but I'm also a little bit worried about this 9:45 announcement. I'm seeing a nice trade setup. A nice trade setup. But I am worried. We're clearly below VWAP. We are pushing on those. Who, buddy? Who, buddy? How's this flow looking? Mag 7, try to get going, kind of getting hit now. SPY, also try to get going, got hit, put in a lower high, taking an additional hit right now. So we puked, try to get a recovery, put in a lower high, getting a bit smacked. And the question is this going to keep going? We are right at this 5. We're right at a key level, folks. We are right at a key level. Are the buyers going to step in? We're going to find out. Either this is a double bottom, kind of like a W setup right here, and maybe looking for this last leg of the W, or is it literally A, B, C, D, and we puke? Both of those from a technical perspective are valid to look at. All I can tell you is that we are at a massively important level. So we're basically just waiting here to see how these players react. I was really thinking about 57 here. But I need to wait for this report. I gotta be, because I want to trade more aggressively. I want to trade 2 contracts. So because of that, I don't think it's really advisable in this environment to trade 2 contracts right before an announcement. And also, even though the Qs have a little bit more room to go, obviously, SPX is right at that key level. So you could say, well, it could easily bounce here. Do you necessarily want to, quote unquote, short the low of the day? Well, I get it's not the low of the day on the Qs, but we're at that key level on the SPY. So putting that together with the fact that I know I want to trade more aggressively, and I know there's information coming out at 9:45, like, I don't know. You guys saw it. I drew this. I was really, really close to taking this trade, and obviously it would have worked out pretty well for me. I would have been in, let's just call it 55. It looks like at one point it was all the way down to 17. My stop would already be at break even. So maybe I would be knocked out. I'd be sweating right now if I took this trade, but obviously I didn't. As you could see, I've taken no trades right now. So yeah, I would have been okay. So regardless, I can't like cry about it, because I would have been just right now. I would have been stopped out for break even after being up like a good chunk. So it is what it is. So maybe that was a good time to wait. We'll see. We'll see if I'm doing a smart move, a dumb move, a lucky move, a not lucky move. I just really want to wait for this report. 4 years ago, I quit my job and became a DGen. Thanks, Vash. Dude, 4 years ago? That's how long we've been doing this chaos? 4 years? Dude, we probably aged 40 in that time frame. But yeah, folks, as we're waiting for a little bit of this data report to come out, give Chaos a quick round of applause. He's the man behind the curtain that makes the music. He makes the thumbnails. He makes the intros. He's the editor. Folks, I have no artistic bone in my body. So whenever there's anything that you're like, wow, that looks cool or that sounds cool, it's all because of the producer. So shout out to Chaos. The show is exponentially better because he is around. If it was just me, you'd be getting no songs. You'd be getting the worst thumbnails. The editing would be piss poor, and in reality, you'd just be getting a lot less content. So very, very much need to understand that the things that get pulled off in here, it is a multi-person effort. This is not a one-man show by any means. Oh, the SPY's going fucking that son of a bitch. I can't chase it right now. I gotta wait. You gotta wait. I gotta wait. Obviously, you can do what you want. I'm not your mom. I am by no means your mother. So have fun. The Mag 7's kind of flat. The SPY just hit a new delta low, definitely trending down. 5 minute, 10 minute, 30 minute, 4 hour, 5 minute, 10 minute, 30 minute, 4 hour. So the price structure is bearish. Lower highs, lower lows, lower highs, lower lows. Price momentum is bearish just below all the EMAs. And then obviously the final sanity check is the options flow. Looking at the Mag 7 here, it just got clocked. Looking at the S&P 500 here, also appears to be getting clocked. And we just got that report. What was it? Obviously React. Damn, I could have been in this trade. Coulda, woulda, shoulda. Chicago PMI actual 47.6. The forecast was for 45. Well, I can't chase it to the downside now. So if I'm going to take advantage of this, I need to wait for some sort of pop that then fails. But just to arbitrarily chase it to the downside. This was, from a technical perspective, a pretty good trade here at 944. The reason I didn't take it, same thing here with this breakdown at 940, is because I knew this report was coming out at 945, and obviously the market's reacting negatively to it, but there's no way to have predicted that. I mean, you could have taken this short, but what if this was a good report and we just ripped right against it? So like, I didn't feel like taking that risk. But I mean, if you did, it paid off. But for me, I just didn't want to take the risk of a binary event such as that. So obviously it would have paid and it would have paid nicely, but it's just not particularly the setup that I am looking for. SPY can go down 3% today. No shit. It could go down 4% today. It could go down 2% today. It could go up 3% today. Jack, did you really think that was a profound statement? It could go down 3. Yeah, no shit, dude. It could go down 4%. It could go up 4%. Like, any of that's possible. Yes. Now you're just stating things that like there is a percentage chance of that happening. Yes, there is a percentage chance of that happening. That is very, very insightful. The sky is blue. It feels to be equivalent. The sky is blue. All right. What do we got going on now? We did dip below 5,500. I wonder if this is a little bit of a flush here. We took out that low from mid-March at 5,504. Let me delete that. There's no point. Right here at lower highs, lower lows. But I am seeing a little bit of some positive flow come in right now. Mag 7 getting a bit of a pop while the SPY hit a low delta reading of the day. And since then has been going up. I assume, yeah, right here. It's puts closing. No one's touching calls. If anything, they're actually selling longer duration calls. The 0 DTE calls are flat. As in, no one is getting into calls right now. They're getting out of longer duration calls, but what I'm seeing here is actually puts are, people are just taking their money on puts. They're taking their money on puts. All right. We're going to go.
Submitted.
We're going to go for it. We're going to give it the old college try. We're going to give it the old college try. Waited for a little bit of a pop, a potential failure. I don't know if it falls here. This could be a higher low. This also could be a lower high. I have no idea. I have absolutely no idea, because if the market goes up or down here, it's going to be depending on people who are about to trade. I don't know if the people getting into the market about to be bullish or about to be bearish, are they collecting their money on their puts, or are they going to get out of their calls? I have no idea what they're going to do. All I can tell you is we're trending down. So price structure is pretty bad. Options flow, bearish, 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 bearish. I can see that we are struggling to recapture this key level. Maybe we do, maybe we don't. But then looking at options flow, here's a look at the SPY. I saw a little bit of weakness right here. I thought it was going to keep going over. Unfortunately, is now ripping my face off. Do I need to cut this position? I saw the Mag 7 fall here this is part of the reason why I got in. I did not expect this to pop. Or I was kind of hopeful that it would go the other way. Is it just going to go to 5,500? All right. We're going to be in a second. Maybe instead of taking this breakdown, maybe the real play was having the patience to see if this trend line breaks. But if I'm wrong, I'll just cut it early. That's what trading is. You're going to be wrong pretty much half the time that you trade. Like, that's just it's unfortunately a brutal aspect of trading, but it just is what trading is. Let's see if Lady Luck is on my side today. Can your boy pull another rabbit out of the hat today? I am a little bit bummed out with how much price just popped in my face there. Stop chasing? Chasing what? You really think my trade was chasing? After I've been sitting there saying, nope, I can't do it now. Nope, I need to see some sort of pop, and then the pop failed. Like, literally what I was looking for and I called out beforehand is exactly what happened, and then I took the trade. The 945 reading was bullish. Apparently not, because the market went down. Interesting way to describe it as bullish when the market is down, dude. Oh, I'm short right at 1900. I was hoping that it would be a rejection when I saw this key level. I was like, oh, we broke. I thought it was going to serve as resistance, but it's now kind of serving as support. But like I said, when you are trading, especially actively trading, you're going to be right about 40 to 60% of the time. It's 50% plus or minus 10%. So the way you're profitable is by basically when you're wrong, admit you were wrong very quickly. And then when you're right, ride the trend, ride the trend, ride the trend. That's pretty much how you do it. Do you plan on closing your swings before Wednesday, then reposition? I don't know, but that stuff I share with the Discord. Like I post in real time whenever I do anything, but I'm watching this high that we saw at 943.
Order canceled. Order filled.
What the fuck? Oh, that's the take profit. Yeah,
Order
my risk just got
canceled.
hit. Risk just got hit. Son of a bitch. Son of a bitch. And I think it's options right here. We have this recovery. Is it options picking up right here? Yep, look at that. Holy shit. The SPY, look how many puts are being closed. Fuck. This might be the start right here. Look at this rip in puts. Look at that rip in puts. That is crazy. It's just going. It's just going. All right, hang on. I am rolling some stuff. Let me see. Okay, we did that. We did this. Hang on. Let me update over here. Where is the Discord? Okay, I updated the Discord, and now I'm wondering, I mean, look at this. Right? It was a little break. Look at all those puts. Some calls are now being purchased, but so many longer duration puts. This might be a start of some JP Morgan stuff. I mean, look at that pop from 946 all the way up, just ripping. Completely changed the trend. Obviously, we had options down until about 946, and now it's just going. What do I have here? Potential trend line breakout. Do I want to flip it? Am I really that confident in this? Am I that confident in this switching up? Look, it just started pumping. We got this. Jesus. My finger is on the trigger here. Do I want this trade? Yes, no, maybe so. How strong is this? It's kind of stalled out. It pumped up and now it's flat, but the SPY's still picking up. This is interesting. Right here, check this out. The SPY, the delta is just ripping. Look at all these puts. The put delta is just skyrocketing. Longer duration puts. Wow. MSTR is picking up. All right.
Order filled.
We're going to take a stab at it. See how it goes. Can we take out 19,100? I'm kind of looking. We don't really need this one. Just kind of watching whatever that high was here at 36. We just tagged it, but can we actually hold above it? Also watching 19,100. Let's see what in the world is going on. Look at this. This is crazy. Turning point. 9:46 in the morning, and then just huge. I knew these JP Morgan expiration days. Look how fucking, and now people are getting into calls. That is nuts. That is absolutely nuts. Oh, bro. brother. Okay, what can we feasibly go to today? Obviously, I'm watching this opening print. I'm watching 5,500. I'm also watching 5,565, just because this is a key open interest level, and then this is the JP Morgan position. Then we have the upside gap fill to 5,572, 5,590. Oh, golly. Golly, gee willikers. What do I want to do? What do I want to do? Oh, what do I want to do? What do I want to do? How do I want to play this? Oh, do I want to play this? Do I want to play this? All right. All right, here, if you're in the Discord, kind of putting on a little bit of a unique position for me. Haven't really done this type of a trade. Haven't quite done this type of a trade. Where is the Discord? All right. If you're in the Discord, I'm trying something. I'm giving it a whirl. I'm giving it the old college try, you know. It's a little bit out of my wheelhouse, but hey, that's what's fun, right? And now this isn't loading. Is this position still in? Hey, I'm up. I'm slightly green on this. But with how beat up the accounts got from my first trade, I kind of just need to let this run and hopefully it works out. I could try to set a break even, but I can't even feasibly do that yet. I kind of need it to hit 19, whatever. But what I'm hoping is that I got a little bit faked out on right here. Let me show you. Right here, when it continued to dip, I thought we'd get this like continuation, but instead we just got a huge reversal. Huge reversal right here. I like this dip. I was like, okay, this bounce failed. We're about to plummet, but nope, it was a higher low. We pumped, put in another higher low, and then we just started popping. Why is this brokerage not working for me? But really, I mean, obviously my interest in is how wild could this be? You really do need to be uniquely careful today, because if you look at the history of these JP Morgan expiration days, there's like multiple percentage swings both directions, like big pumps, big dumps, big pumps, big dumps. So maybe this is just a fake out pump, or maybe we're just pushing, we come back a little bit, put in a higher low, and then just go from there. Obviously that is clearly possible. Clearly possible. All right, why is this not loading for me? Hang on, I need to reload this. All right, we have how do I want to play this? Okay. Oh, we're gonna see what in the world is going on. What in the world is going on? Maybe this is the time to strike. All right. We're going to do even more stuff. When in Rome. When in Rome. Fuck. Seemingly can't get a fill. Dude, okay, finally. I had to force it through, but all right. Got a fill. Little bit chasey. It is what it is, but here, if you're in the Discord, I'll send this in, trying to get it in ASAP. Trying to get it in ASAP. Where the fuck? Where is... Dude, nothing is loading for me today. All right, here we go. Finally. Finally. All right. Did a couple moves, and we are just seeing, look at this delta's going again. Craziness. Absolute craziness. And we're just popping. We're just popping now. How's it going over here? I'm in the green. We dipped a little bit. Looks like it knocked out one of my accounts, which is very, very unfortunate. Now I'm awkwardly here with 19 accounts, which, what the fuck? That's strange, but that's a bummer. So one account did get knocked out. It basically came back to the initial value, and when you do that, it blows you out of your position. But I guess the other ones had enough. Like, there's a slight amount of slippage, and I guess the amount of slippage was enough to kill one of my accounts, which is just a huge pain in the ass. But it is what it is. I don't know. Maybe I shouldn't have been so aggressive with the 2 contracts. That was actually probably dumb of me to do that, because if I didn't do 2 contracts, I would have had much more leeway. I was in at 1900, out at 64. So instead of, I lost 24, 2500, whatever that is, but I would have lost half that. So I would have had enough room to run it, I suppose. Enough room to run it. I tried to take this failure, but this failure just ended up being a higher low, and it flipped. So I guess I could have. I don't know if risking that was smart. I like that. It was just kind of wide, and then it just kept going. But regardless, I'm up on this one now. We're going to see what in the world is going to be going on. The SPY made a new intraday high. All right. Watching the low here. Piper is going to fire eventually. I wonder, you think we're going to come all the way back up to this? We just made a new high on the SPY. The Qs have a bit more room to go. MSTR's popping. Tesla popping a bit. The VIX is actually just kind of coming down. Tesla is down 5%, but recovering. NVIDIA, everything's down, but attempting to now recover since 9:45. So basically, everything gapped down, puked for another 15 minutes, and then since 15 minutes in the session, the entire market is now saying, okay, cool. And it seems to be very, very associated with all these puts covering. And actually, a decent amount of call buying started, I don't know, around 9:50-ish. You could see the 0DT calls ripping to about 10:02. We're now getting a little bit of a flip at the start of the hour. You could see the call people are happy with their profits, and the puts are now flat. But the delta, this is a huge switch. Very, very bearish till 9:46. Then a pop all the way up to 10:02, taking a bit of a breather now. The question is just going to be another higher low, and then do we just keep going? So that's what I'm on the lookout for. Basically, can the SPY make a new intraday high? And then can the Qs also get back up to their high from where they started the day? The SPY just tagged an intraday high. The tech sector is lagging a little bit behind, but I'm seeing Palantir pop, MSTR pop. This is kind of what I was alluding to before the market opened of, we see crazy reversals on these types of days. We really, really do. So this shouldn't be catching anyone off guard, especially because, hey, I kind of warned you guys before it actually happened. So let's just see if there's any follow through here whatsoever. A little bit of a dip. Maybe the 5 minutes actually trying to go bullish right here. 10-minute is testing on ES. For NQ, 5-minute, 10-minute, 30-minute, 4-hour. These are all still bearish, but we're seeing, if it does reverse, this is the start of it. Now, this is how all reversals do start, but just because you see this doesn't mean it's going to be a reversal. So paying close attention to whatever the hell is going on right here. Tech is lagging behind. The overall market's trying to recover a bit better. Like I said, new intraday high. The SPY is down 0.9%, while the Qs are down double that, down 1.8. So a little bit of extra bearishness. I would still say, looking at all the red, clearly there's bearishness across the board, but there is seemingly more bearishness in tech, at least at this moment in time, from a percentage basis, as in from its close from Friday. Intraday action, we're getting a stronger recovery, but let's see. Basically, I'm looking to see if the Qs can take out 461.45. From a key level perspective, we overshot the support 5,500, and then we waited for this report to come out at 9:45. A little bit jagged, tried to sell, and then that's exactly when puts started to get closed out, literally starting at 9:46, 9:47. Puts started to get closed, and then not only did the delta shoot up right here, this is the delta reading of the options market, but obviously price quickly followed. And now the question is, does it have enough to keep going? If it does have enough to keep going, the next obvious level is 5,550. That's a pretty important open interest level, but I would say what's more interesting to the market right now is 5,565. This is the JP Morgan position. So if you truly think that this is the bottom and we're going to recover on whatever time frame, these would be the two levels that I'd be looking for. Now, of course, if you're bearish, you might see a rejection at any of these levels. I mean, we have a key open interest level, we have the JP Morgan position, we have the upside gap fill to 5572, and then we have the close at 5581. So there's quite a bit going on in this region. I think 5,550 is an interesting scalp target, but as a person who likes to be in trades for a little bit longer, I'd be kind of watching this region, somewhere between the close on Friday, that red to green move, and then also the JP Morgan position. So it's about a 15-point range, which I know is wide, but this is kind of where like my eyes are drawn to. JP Morgan, the close, the upside gap fill, and then the gap fill up to the close. This is the zone I like. Yeah, okay, let's watch 5,550. There might be a little bit of a reaction here, but I kind of care more about this 15-point region and seeing how the market reacts to that. So as that either is or isn't playing out, of course, this entire time, the major thing to be paying attention to is really is this options flow. I mean, you could see it right here. This is exactly what changed. 946, everything changed, and we went from a bearish momentum to more of a bullish momentum. Popping up till 10:02, but even that's recovering right now. I can't believe I got knocked out on one of these. That was pretty fucking stupid of me. I only have, my OCD is gonna go crazy from that, of fucking only having 19 of my 20 accounts. I lost one, obviously. Oh, if you want to trade with someone else's money, I'm trading on the futures market right now. I do want to remind you that today is the last day of this right here, 80% off evals. You have 15 hours left. Use that code Goonie to get 80% off the eval. So you could pass it in one day. I like to use the 50K account. I'm more than happy to answer questions, but I have a lot of videos of what this stuff is. That's up on the extra channel. It's also in the description of the video, but I just want to let you know you have 15 hours left to get an 80% off. Use that code Goonie, G-O-N-I-E, to get 80% off. It does end in 15 hours if you're trying to save a little bit. And as you can see, I started off the day attempting to trade on 20 of their accounts, and I lost this one for whatever reason. It pulled down just enough to knock out while all the other ones were fine. So there's a little bit of a differential, a little bit of slippage. It is what it is. They give 80% off without any codes. That's not true whatsoever. If you don't put in a code, they're going to charge you for on a 50K account, they'll charge you 167. Serge, you're straight up wrong. You are undoubtedly 100% wrong. I guarantee you, if you put that in right now, it doesn't just arbitrarily give you a coupon. Like if you just go to checkout and put in no coupon, instead of charging you $34, they'll charge you $167. I guarantee it. So everyone else, excluding Serge, you can go pay for it if you want. If you want to pay 80% more for no reason. Sorry if I'm wrong. Nope, you're definitively wrong. Not if you're wrong, you are 100% wrong. There's a coupon, and I know this because I've actually done it myself. I accidentally forget to put it in, and then I'm like, wait, why did I have to pay so much more for that one test? And then I realized it's because I was stupid and I didn't put in the code. So for those of you looking to actually save money, I'm telling you, you have to put in the coupon. And you could see it right before you check out. It shows you the cost. It's not like it's hidden from you. Like there's a slash in the number and it shows you the new cost. If you see the full number when you're checking out, don't check out. Something went wrong. All right, the SPY hit another new high. Obviously, I've already given you the situation that I'm looking for. I'm looking for a push up to 5,550, maybe a little bit of a stall out there, but in reality, I want to see a push up to the JP Morgan position, the upside gap fill, and then also the close. So I'm looking for somewhere in this 15-point region with a potential hiccup right at this level. I would like this grind up, and I believe that this particular call out, this particular trade is intact if we continue to see this trend in the delta. If we continue to see this trend in the delta, I want to see a continuation of either calls being purchased or puts being sold. I just want to see the deltas go up and up and up. If that keeps happening, this entire trade is still very much in play. Very much in play. All right. The Qs have not made a new intraday high. The intraday high was from the opening minute. So like I said, right now, the relative weakness in tech is still there. You could see it on the intraday chart, not making a fresh high. And you could also see it in the size of the gap down, almost double how much the SPY was. Let's see. You can email them and they'll refund you the difference. Oh, I didn't know they do that. Is the JP Morgan position a call or a put? It's a put, and how do you not know that? We've been talking about it for like ever. It was the main point of my morning prep show. It was the update video last night. We were talking about it last week. If you're at this point in today not knowing what's going on with JP Morgan, you're just completely missing out. You're completely missing out if you don't know what's happening at 5565. You're just not doing enough prep. You're just not getting properly prepared for the trading day. If you're coming in right now saying, what is that one? It's the leg of an overall collar position. So a collar position requires three things: the underlying equity, sold calls, and long puts. So there are sold calls, but they're way, way, way far up. They're nowhere close. So there's basically no gamma or delta implication from the call position. That also expires today. It's the same expiration date, but we happen to be very close to the put side. But remember, JP Morgan has on a collar position, which is it takes three things to put on a collar position. You need the underlying stock, you need to sell calls, and you need to follow Trader TV. Stop watching this guy. He's trash. I'm trash? You're saying that this is trash? That's trash. Making... I would like to see someone else do this live in front of everyone, day in and day out. Yeah. This is trash. You know, this is what's so interesting is like some people are just so fucking stupid that like they're actually like you cannot help them. He's trash. Watch someone else. Okay, go watch someone else. Can they beat this? Ask them, can they beat a 350% return while managing almost $500,000? A 350% return while managing almost $500,000. Trash. Yeah, trash. I bet they're this transparent, this successful, this honest. I bet so. Trader TV doesn't even show their P&L. Oh, because they're probably really good then. Oh, that's what I want from my trading shows are people who obfuscate their actual success and or failure. That's what I want. I want people who hide their trades, hide their P&L, aren't transparent about it. That's what I want in my trading show. Jesus Christ. Some people are truly too stupid to be traders. Like I really do believe that there's a certain level of something that you need to have to like that you should have to even be allowed to trade. And then there's dumb fucks like that who, how do people time and time again get tricked into supporting and like, I guess in any way showing faith in people who aren't transparent about it? Like it makes no fucking sense. My first day on PA Apex and my account's up 2,100. Count that on my 4 other sim at 13. Hell yeah, dude. Testament crushing it. Well, everything's rebounding right now. Trader TV absolutely doesn't go in depth with options, news, points of interest, and own monetary loss. Yeah, I mean, aren't they just like scalp trading stocks on their own prop firm, and they don't show their overall success or failure? I'm pretty sure they like literally are just scalping. Well, I don't think they trade futures. I don't know. They don't trade options or futures or crypto. I'm pretty sure they're scalping stocks on their own sim-funded platform. And the last time I saw it, and maybe it changed, I don't think they have documented P&L. Like, I don't think there's a ledger of their traders' success or failure. I hope that they're successful, and I hope what they teach is accurate. But I've never seen like any of their, I guess like trading logs, P&L. I don't even call it that because I'm pretty sure it's sim funded. And maybe I'm wrong. Like the last time I saw it was years ago, so maybe it's changed since then. But I think for anyone out there, hang on, what's happening right now? Are things switching here? Not too much. I think everyone should be showing their P&L all the time, 100% of the time. Other than that, like, how do people know if like what you're saying is worth it? And like, I don't know. I guess I'm not that interested in scalp trading. If I'm scalp trading, I'll do it on the futures market just because it's more levered. So if you're right, you're going to make a lot of money. But also, I personally find scalp trading on the equities market to be very boring. If I were to scalp trade, I would either be doing it on futures or options, just because if you're right and you're confident, you would want to do it where you make more money, and you make more money in the leverage market. And there are people who could scalp equities and make a shitload of money. I'm not saying it's not possible, but you have to have quite a bit of capital to make it worth it. Like quite a bit of capital. So, I mean, there are people who pull it off. I'm not saying it's not possible. It's just not my personal interest. There's a high schooler's pickup line. I'll show you mine if you show me yours. P&L can be manipulator. What the fuck does that mean? How do you think I'm manipulating this? What do you think here? I'll reload the page. I'll click around. Like, what you think I'm photoshopping this in real time? Like, I'm so fast at like altering the code. Dude, I'm literally reloading the page. You're seeing it load. It's pulling the information from my brokerage and I'm moving. Like, you think I'm manipulating this? Dude, this is what, like, whenever you hear these stats, and I understand it could be like somewhat jarring and somewhat scary when you hear stats like 90 to 95% of traders fail, which it is true. But like what I care about, and I think about this like a lot throughout life, is I want the stats on people who fail who actually take it seriously, who don't say dumb things like that. Like, oh, it could be a manipulator. Well, first of all, learn how to spell. Second of all, yes, it could be. Anyone can Photoshop, but are you suggesting that I'm in real time manipulating as I'm refreshing the page in front of you? Like, it literally just makes no fucking sense. So when there's people who have that low ability of problem solving and there's like, it's non-existent critical thought, like, no shit that they're going to fail at trading. Like, it blows my mind. Some people are retarded as fuck. Yeah, that by definition, we see that. Broker statements is the only way. So you're saying that a P&L picture can be doctored, but broker statements can't be doctored? We're dealing with a genius, folks. We caught him. Everyone calm down. Everyone act cool. There is a genius in chat. There is a genius in chat. Broker statements are the only way to do it. Of course, you could doctor the photo of P&L, but you cannot doctor the photo of your broker statements. Fuck, dude. Some people out there. Everyone act cool, please. Act cool. There's a genius in our midst. Everyone calm, cool, collected. Fucking dude. Some of these people. Come on. Let's not scare them away. These intellectual titans that we have in our chat today. Let's not do anything hasty. They're very skittish, like a newborn cat. Fuck, man. Whatever. You know the fun thing about being a trader? If you're a profitable trader, it's not so fun if you're not a profitable trader. But if you're a profitable trader, you kind of don't give a shit. because like I know it's money. I know I could go access that money and buy a house if I want. I know I could do it. So like to the point of trying to convince someone, I really don't give a fuck. That's the beautiful, beautiful thing about being a profitable trader is you know if you're making money or not. And when you are profitable, you're like, I just don't give a fuck, dude. Like, oh, whatever. Has nothing to do with the fact that it's called out in real time when I get into a position, out of a position. There's no Monday morning quarterbacking. But yeah, no, good luck with that. Good luck with that. All right. A little bit of a pullback since 10:10. We had a nice ramp from 9:45 to 10:10. Two little pullbacks. Obviously, this one's a bit more different. I thought we were picking buck up at 10:15 here. I was like, oh, okay, another pullback. We're about to rip. Obviously, something structurally changed a little bit. You can see the 5-minute try to break out getting smacked. The 10-minute try to break out getting a bit smacked. 5-minute got rejected. 10-minute didn't even test here. So the NASDAQ still legitimately showing relative weakness. Everything is weak, but on a relative basis, the tech sector is even more weak. That's a lot of red, and that's a lot of deep red. Perfect smack right here between 10:05, 10:10, 10:15. Smack. If it can push, if we can see NQ get above 19,168, kind of this high right here, and like really settle and just kind of put in a higher low, bounce off of it, give the 10-minute a chance to actually try to go bullish, I think that could actually get legitimately interesting. I truly do. The SPY's trying to actually hold green. It did get a nice pump, came down. We're kind of evaluating it. The 10-minute try to get breaking out, got smacked. 30-minute and 4-hour on both, I should clarify, are bears. So more of these medium time frames, like obviously dominant by the bears. We do have a huge pump from 946 to 1010. Options, I mean, price is coming down, but options really aren't. You had some calls sold, but no one's buying puts. I guess the way no one was buying calls this morning, right now, no one's buying puts. There's not really, this little pullback isn't people betting on a continuation to the downside. If anything, it's people who rode these 0 DTE calls up are now locking in that money. So we're not, at least as of since 10:10, we're not really seeing bearish aggression. It kind of flipped this morning. This morning we saw bearish aggression and the bulls were nowhere to be found. And then around 9:46, really around 9:50, we saw the bears actually started to capitulate. They got out of their position. The bulls showed up and started to buy calls. And then recently, no one's touching puts. And it's just these call buyers are saying, cool, thanks for the money. And they're locking it in. So it's not like fresh bets are coming in right now. It's just not what we're seeing. So maybe it ends up becoming a shoulder head shoulder. We're just kind of awkwardly drifting right now. Yeah, like we try to get going. It's just a super awkward drift. I wouldn't necessarily be chasing this to the downside just because I don't see those puts. I'd be more confident if I were to, and I'm not going to be chasing this to the downside because if anything, I think the new hedging due to the JP Morgan roll will actually cause the market to go up. That's just my personal opinion. Maybe it's right, maybe it's wrong. I have no idea. But regardless, I would not be chasing this to the downside unless I saw what's that? The Mag 7, some puts are getting purchased for this Friday, but then the SPY, it's just flat right now. The Delta's not leading anyway. We got a huge rip up until 10:10, a pullback, but overall, like we're just kind of not doing anything. I guess one thing favoring the bears, right here is the fact that the 5 and the 10 on the S&P 500 aren't holding. So if it does recover, that could be interesting. But if it starts to break down, I mean, the 10-minute did take out the last two. So if it starts to fall back into here, I don't know. We're basically just going to be ping-ponging back and forth and see if we could get, the Mag 7, something just got hit on the Mag 7, like within the past 20 seconds right here. We tried to get going, and then somewhere at 10:25, something got hit. What was it? Was it Apple? Nope. Was it Microsoft? A little bit. Microsoft did get a bit of a hit there. Was it Nvidia? Nvidia got hit. Was it Meta? Meta got hit. Was it Amazon? Nope. Was not Amazon. Was it Tesla? Tesla took a little bit of a hit there. So some stuff, once again, we are seeing unique weakness in the tech sector relative to the overall market. And some of the Mag 7s just specifically got hit, which is why we had this weird little pullback here. But at this point, we're just waiting. Tech is a bit weaker, dragging things lower, while the SPY was dragging things higher, but then people started to lock in their calls. Palantir's trying to go flat. MSTR's turning potentially. What else do we have? Tesla, yeah, right there, 1025. We just had some of the Mag 7 getting smacked. Tesla was one of them. Microsoft was one too. How's Microsoft looking? Microsoft, yeah, actually 1016 till now. Microsoft making a fresh low. Well, we're seeing either we're... This is kind of the interesting thing about when you do technicals is you could see two completely different setups, as in one's bullish and one's bearish, and they could both be right. So right now on the SPY, the question is do you have a double bottom? Maybe. If it ends up breaking to the upside, everyone's going to say, yeah, that was an evident double bottom. The other side is you could just say you had a shoulder, head, shoulder, obviously neckline snap, and we puked. So it could be bearish. It could be a little like... Those are two completely opposite. One's bearish, one's bullish, and yet the way people love to teach them is just showing you examples of when it would have worked and not necessarily the counter example when, like, literally right now in real time, you could argue that this setup is bullish or bearish and both would be simultaneously right. You could say, yeah, I see a shoulder, head, shoulder, neckline, snap, or you could say, I see a push, a pullback, maybe A, B, C, D. You could see a double bottom. Like, that's what's so frustrating about technicals is a lot of the times, and also I'm not even talking about different time frames. Of course, on different time frames, it gets even more complicated. But even on the same time frame, you could see something that is by definition bullish, by definition bearish, and then whatever way it plays out, the people, like, they just say, yeah, obviously it was that side. It was there the whole time, kind of ignoring the other setup that was the failed technical pattern. So I'm not saying that technicals are horrible. I'm saying you're going to want to use technicals with other things to be a bit more confident in terms of, like, the direction and really what you want. So for this circumstance, I wouldn't just be looking at the shoulder, head, shoulder, the A, B, C, D, the double bottom. I'd be also then pairing it with what is the actual options flow. So that would be the thing that I like pair together. I don't think, the Mag 7 still getting hit right here. Mag 7 ripped until 10:15 and ever since then has been struggling, while the SPY on the other hand ripped till about 10:10 and since then has just been going flat, and we're just kind of chilling right above this 5,500. We had this nice pump. It gave a little bit back, and then for the past however long, we just have not been doing anything right now. But anyway, the point being of, okay, do we think this is a double bottom bounce, or do we think this is head and shoulders, like breakdown and vomit? It's the thing that at least helps me gather more clarity on the situation, because both the technicals are true. I'd be looking at options flow. Without a doubt, I'd be looking at options flow. And speaking of options flow, Tesla is getting hit. SPY's trying to hold on. The Qs are slowly but surely bleeding, taking out this recent low at 10. We have another low at 953. Jesus. Had best argument this weekend about Tesla person was okay vandalizing Tesla because CEO was a Nazi, but thought it would be wrong to vandalize VW or Ford. Nice. People are crazy, man. What can I say? It's not just in chat. It's not just traders. It's across the world. Matt, what's good for long term right now? I'm not touching my long term account at this moment. I don't think this is the time to strike. Remember, most of the time, whether you're talking about your long term investment account or active trading, most of the time you look at the market, it is by definition not a good time to do something. So I believe, look at that. Could have broke down and now it's catching a weird 1030 pop. What's happening? Yep, we're seeing a slight spike here in Delta. We're pippity popping. Actually, that pop was enough momentum Where in the world is this? Where in the world is this? Where in the world is this? Today is gonna be quite the day. Let me just make sure I'm getting this right. And I didn't typo already. Today's the 31st, not the 27th. It is, in fact, the 31st. Okay. If you are in the Discord, Piper just fired. I put Piper in there. Obviously, I'm not taking it. I'm more long premium right now. But for those of you who just care what Piper has to say, Piper did fire. It did fire. Here we go. Here's a look at the flow. Mag 7 still looking pretty rough. Mag 7, price is now flat, but the delta is almost at the low of the day. While on the flip side, we actually saw a spike in trades here on S&P 500. Huge rip, a little bit of a pullback, but picking up now. Coming to the momentum, the 5 minutes trying to go back bullish, the 10 minutes testing. Looking at the Nasdaq, still bearish, but I'm curious if we could take out this 10.05 high, because that would mean that the 5 minute, even on the Nasdaq, trying to get going. And this is the relatively weak thing on the day. But yeah, whatever. Now, are we going to call it a double bottom? Are we going to call it a failed shoulder, head, shoulder? They're both true. Like, they're both inherently true. Huge amount of delta pop. Almost $1 billion in delta notional swing. It went from, actually more, it was 1.3 billion. Could be a cup and handle. We'll see how it plays out. I mean, like, it is all inherently true. And a lot of the times people have slightly different names for the exact same shit. And at the end of the day, you're basically looking at price structure, price momentum, and options flow. I find if you simplify your strategy to like always focusing on those three things, price structure, higher highs, higher lows, lower highs, lower lows, or do we have an expanding pattern, higher highs and lower lows, or do we have a consolidating pattern of lower highs and higher lows? Those are the four options. That's your price structure. What price structure are you in? Are you trending up, down, broadening, or consolidating? Those are your four price structure options. Then from there, you look at momentum. Are you above or below the EMAs? Okay, that's momentum right now. The shortest time frames are trying to go bullish. The medium time frames are still bearish. Looking at the Nasdaq, trying to go bullish, but these ones are still bearish, so like a little bit of a mix there. And then finally, you just look at the options flow, which is the easiest saying, okay, which are we trending up or are we trending down? S&P 500 clearly trending up. Nasdaq, or excuse me, the Mag 7 was trending hard till 1016, coming down to 1032, popping a little bit now. And just because I accidentally said the Nasdaq, we might as well look at it. You can see that the Nasdaq puked until about 1032 and is now picking up. So I like to look at the SPY the most, but I will obviously check in on the others. Speaking of that, we see that the SPY just made a new intraday high, and I'm very curious to see if the Qs can take out 462. That's this recent high, because then you might be getting that cup and handle that a lot of you are kind of talking about. Like I said, a key level for me as a potential pit stop is 5,550, but I want to be clear, I'm feeling confident about this 15-point region. If I were bullish, this is what I would be playing right now. And obviously the Discord already knows that I do have on a bullish position. Not a bad day to be me. Not a bad day to be me. And I hope you guys are making a shitload. Hope you guys are making a metric shitload. An absolute metric shitload. We'll see. We'll see. All right, new high there. Let's mark out this low. Let's go to the 3 minute. Let's go to the 3 minute. All right, we're doing this. Marked all those out. All right, I see some people commenting SMCI. Is there something going on with SMCI? Why are so many people? Why am I seeing comments? Like, to me, this doesn't jump out as anything special going on. It looks actually very similar to fucking every single tech play today. Why is there unique call outs and an uptick in people caring about SMCI today? It looks like by no means special. It looks pretty much the same. Like, everything's kind of moving in unison today, not necessarily like standing out to me. I'm trying to understand what's happening on SMCI that I don't know. I'm actually not seeing really any particular things stand out to me as in like bucking the overall trend. A lot of things are just like moving together today. Would you exit your SPY if it keeps going up? Would I exit my SPY? What SPY? I mean, when I trade, it's posted right away as fast as I like humanly can in the Discord. Now even that's a lot. Leadership change on SMCI. I mean, SMCI freaks me out a little bit just because of whatever their accounting issues were or weren't. Generally, when it comes to the SEC, where there's smoke, there's fire. Matt, are you still shorting Tesla? Once again, it's all in the Discord. Matt, if you could go back in time, what is one thing you would tell your past self? Never trade penny stocks. It's fucking stupid. It's a waste of time and you're just going to waste money. There are some people who are hyper successful at it, but it's not going to be you. It's not going to be me. I would never waste time doing that. I mean, I assume you're asking this with like relation to trading. If you mean it in life, that's a good question too. But I would say with relation to trading, I wish I spent more time diving into the math of options. I feel like over the past year, one thing that's like really made me feel more confident in understanding the market is truly has to do with feeling comfortable with Vanna, Gamma, Charm, Delta, like all those Greek influences on the options market. And there's a lot of resources out there to learn it. And it's not necessarily easy. Like you are getting into the world of like second order derivatives, third order derivatives. But I feel like when you dedicate that time, like once you do it, you do it. Like once you have the knowledge, you have the knowledge. So I think it's really a useful tool, especially in this environment where zero DT trading is like dominating the day. Like when you look at price, when you look at technicals, they're all inherently backward looking. Price is what's already happened, not what's about to happen. Technical structures are based on price. Once again, a thing that's already happened. If you look at RSI, MACD, Keltner channel, Bollinger Bands, all of these indicators and whatnot that we use and price itself, well, price is what decides the technical structures. Price is what decides what the indicators are showing because, once again, you're putting in price as the input and it does a computation on it. That stuff is all backwards looking. It's all the things that have already played out, not necessarily where we're going. Right now, the only thing I know of, at least, that has something to do with the future time is actually options. And what's beautiful about it is not only can we see the current options trading, we could see the current open interest, but we know because it's a 100% lit market, like there's no trades that are hidden, that we are getting a glimpse of what people think is about to happen in the future, which you don't get that by looking at price or indicators or anything like that. And I'm not by any means saying, oh, like don't look at price, don't look at indicators. No, I like it. But you want to pair that information with things that have some sort of forward-looking capability, and that is the world of options. Price, technicals, indicators, none of that stuff has forward-looking capabilities. It's telling you what happened in the past, like 100%. The only thing, like I said, that I know of that has something to do with where we're potentially going is the options. So thinking about it that way, and also the fact that options trading is now more popular than it's ever been. I would say over the past year, one thing that has, like I said, made me feel much more comfortable about like what the market is, what it isn't, and improving my own mental framework of trading is very intimately understanding all of the like Greek influences on the market. Sell everything for AMC long hold. You know what? I wouldn't have, if I could redo the AMC thing, I would have done it again, obviously, but I would have done, there's key aspects of it that I would have done differently. There were various people that you guys all know that I knew were lying the entire time. And I wish, like, I didn't want to call them out because I was like, well, what's the point of rocking the boat? But now, I guess in a slightly older age, I think liars are liars and they should be called out. So, like, I knew, like, I don't know. I think there's social things I would have handled differently then. For sure. I would have used my platform and be like, hey, not only is this person a scumbag liar, but I have proof that they're a scumbag liar. And I kind of wish I maybe did that rather than just saying, you know what, that's their business. Like, they could take care of their business. I'll take care of my business. And at the end of the day, I thought that would win out, but whatever. But it's water under the bridge at this point. It still blows my mind that people are still like actively talking about GME. Like, how many times are people gonna get tricked into that type of shit? Like, literally just recently, GME's like, we're putting Bitcoin on the ledger. And then it had this gap up. And you know what they do? They do an offering, convertible bonds, and then they just crush it. How many times are people, 1, 2, 3, like every single fucking time people, like, why are people so susceptible to this? Like, you guys can see this shit a mile away. Anytime it pumps up, it gets horrifically dump. Pump, dump, pump, dump, pump, dump, pump, dump, pump, dump, pump, dump, pump, dump. Nothing, nothing, nothing. Pump, dump, pump, dump, pump, dump. Longer pump, then a dump, and then another pump and dump. Like, why do people think that the next pump, they're like, but this one's a different one. I swear, this one's gonna be a little bit fucking different. Like, fucking what, dude? How do they keep fucking falling for it time and time and time? Like, at a certain point, like, you gotta start looking in the mirror and ask yourself who's really at fault. If you're sitting there and you're like, dude, like, I just keep getting tricked, like, maybe it's fucking you. Like, what? Man, it blows my mind. I love GME Talk. When they praised I buy puts, made 700% last week. Congrats. That's the smart play, because literally you're looking at the basic pattern of how this goes. Like, how are people still getting tricked in it? And like, it's one thing when it's like new and it's like the first pump or dump and you're like, oh, like, that's kind of crazy. Like, maybe we could teach a little here, but by the time you're on your like 15th iteration, like, the people who are going to learn, like, at a certain point, it's like financial Darwinism. It really is. Don't lie. Who is still holding on hope for AMC in here? Hopefully no one. If you're holding on for hope for AMC, I mean, whatever. Maybe you're right, but you're also dumb, and it's not. The debt is just ballooning. No one goes to theaters anymore. Every big movie is just a giant flop. Everyone just watches it on streaming. Their extra revenue of popcorn and wine chocolate or whatever the dumb shit they do, no one cares. All they do is basically use the retail support base to increase the value of their own golden parachute. So when they leave, they're multimillionaires, while the entire like retail support base is just getting absolutely fleeced. It's just fundamentally not a good business. And it was never a good business. It just had, coming into the Rona period, it had billions of dollars of debt. It's not like it was a flourishing business and it was just COVID that like fucked it over. That's not true at all. It had massive, massive debt. And then obviously Adam Aaron just made it worse, and he had chances to pay it off and he was just too stupid to do it. And now he's trying to do it when the stock price has taken a huge hit. And it's a very poorly run business in an industry that's just dying. It is honestly just dying. A lot of people are down 90%. Should they sell? I don't care. I'm not their mom. I don't give a fuck what they do with their money. I care about what I do with my money. You're better off betting on Netflix and Amazon TV and trying to hold on to AMC. I mean, Amazon is legitimately a good business, and I know that they have some Prime, but I just think we're going to a streaming world, which is a bummer because I actually legitimately like movies. Like I like going and seeing big theatrical releases. I think it's fun. I do, but it's just the general world is no longer using their free time and their disposable income to go to movies. That the usual condescending reply. How's it condescending to say it's your money? That's not condescending. It'd be condescending for me to say that's a pretty fucking stupid question. You're down 90%. Why would you let yourself go down 90%? That's condescension. It's not condescending for me to say it's your money, dude. What the fuck? You can see how much you're down. Are you comfortable being down that much? Don't let yourself get into a situation when you're down more than you're willing to lose. So once again, the condescension would be me saying, that's a stupid fucking question. Why would you ever let yourself go down 90%? But my initial remark was just honest. I don't know your situation. I don't know if you're secretly rich, secretly poor. I don't know what your risk tolerance is. I don't know what your thesis is. I don't know any of it. And that's why it just kind of comes down to, I'm in control of my account. You're in control of your account. Joke's on you, Matt. I'm down 98%. Yeah, because even if you sell there, whatever. At least you have capital gain losses you could lock in right off against some of your gains. So the 5-minute and the 10-minute are trying to test here on NQ. They're bullish now on ES, the S&P 500. Here's a look at the flow. The Mag 7 puked all the way down till 10:30, trying to have a little bit of a recovery. NASDAQ, not really doing much. I think the most interesting thing to look at is the SPY, which just hit a new Delta high. Oh, brother. I would really love to see the Qs take out 463. That's so funny. Sorry, I'm just thinking about this last for someone to say the condescending reply when I just said, it's not mine. You pumped these stocks for years. Now you're happy to shit on those people who made you money. What do you mean by pump stocks? Do you mean that I was right saying, hey, I think this could squeeze and it squeezed and a lot of people made a shitload of money? You were smart to do that the same way you were dumb to bet against the stock at that moment in time. And then obviously it flipped. That's what I don't get is, you realize that the market is dynamic, as in every single day, there's new pieces of information that you have to consider. But then this is what I'm seeing unique about the AMC community is it's as if they come up with this initial idea and they're not allowed to switch from that ever. And that's what I don't get. It's what do you mean pump? Hey, I think this could squeeze. It did squeeze. It went from $5 up to 72. What? It was right. And then guess what? It was a good play on the downside. But the fact that people were seemingly excited about it at one time, apparently they're not allowed to change their opinion. If you're engaging in the market, you have to have the ability to take in new information. Because if you don't, you're gonna lose. You are 100% going to lose. So I don't understand it. And it's just, on top of that, that blows my mind of just thinking that, nope, you come up with one good idea and then you never just take new information and you whatever, I guess you're stuck. But then beyond that, going back to the other comment of you saying it's condescending, I guess let me talk to people who are maybe older than me by a decade or two. So I'm 30. So if you're 40 or 50, I would love to get your true input on this. Am I now at the age that I'm just realizing many people are giant fucking crybaby pussies? Or is that a new thing? Because when you notice something, maybe it was always there and I was just oblivious to it throughout my life. Maybe I just lived in a little bubble between my job and college and I didn't realize it. Or are we actually trending in a way that people are becoming giant crybaby fucking pussies? I don't know what it is. Because I notice it and I see it now, But the question is, was it always there and I was oblivious to it? Or is it actually getting worse because of maybe social media, this, that, the other thing? But like, what is it that there's people that are like just such fucking crybabies all of the fucking time? Like, they're just such pussies. Is this some sort of leftover effect of like participation trophies and lack of critical thought? And hey, like everyone, like it's going to be fine. It's not going to be fine. Get your shit together or it's clearly not. Like, I just don't get it. I don't know. What is it? Welcome to your life. It's always been that way, but it's way worse. So you guys are saying I'm not noticing now. It's actually trending worse. Oh, well, that's kind of a bummer. But anyway, to the person who doesn't have the, I don't know, the fucking backbone to handle me telling you that you're dumb, you're not going to make it in trading. Just quit now. Seriously. And I know you're going to freak the fuck out and that's a mean thing to say. It is a mean thing to say, but it's also an accurate thing to say. Sometimes the like mean things are still reflective of reality. Like reality isn't like always just this like great place and everything fucking works out all the time. So is it mean for me to say you don't have the intellect or the emotional aptitude to trade? Yes, that is a mean thing, and yet it's also an accurate thing. So as mean as this is, it's also inherently like caring because I'm telling you to not lose money. Like you're just not going to make it in trading. And anyone who this is resonating with, hey, yeah, sometimes the fucking shoe fits and it's just a shitty shoe. And it just is what it is. So yeah, it is mean, but I don't know. Some people don't hit the genetic lottery. Other people do. I don't know. It's not mean for you guys to say, Matt, you're not going to make it in the NBA. No shit, I'm not going to make it in the NBA. I'm 5'10" on a good day and I can't shoot for shit. It's not mean. It's just reflective of reality. I'm not going to be an NFL lineman. Once again, 5'10". I need to double my weight and grow 8 inches. Not going to happen. Sometimes like it just fucking is what it is. You play the cards you have and you recognize the cards you don't, but we don't live in this world where anyone can pull anything off. It's just sometimes you got to fucking know like what's going on. People generally lack critical thinking skills, but also hate being accountable in a game and a society. Winning is more important than being right or true. I think that's accurate. Do you even like basketball? Not so much. I enjoy watching it every so often, but no. Matt's in a wheelchair. Soccer mom syndrome. It went to shit when they stopped keeping score so little Johnny didn't get his feelings hurt. Well, that's the crazy thing about trading is like, is there anything in our life that's like more apparently in our face of like, this is the score? Folks, it is your P&L. It very much like, it is a little concerning that society's breaking this way of not keeping score and competition and they don't want winners, but well, they don't want losers, which inherently means you can't have winners. And then you try to engage in trading, which is the most in-your-face thing ever of like either you're winning or you're losing. There's giant green numbers suggesting you win and giant red numbers saying you're getting your teeth kicked in. It's just, Jesus. Matt is actually a VTuber. Yeah, this is just completely fictitious, made up, and I'm just a dude in a wheelchair. Could happen. Could happen, could happen. Oh, where are we at? Where are we at? Where are we at on this? 47K, dude. Cracking 400. Not a bad day. Not a bad day. Would love to see, like I said, I'm calling it out, 5,550. If we could take that out, really, I'm looking for this zone up here today. That would be my major bullish target of the day. Is if we could get above the JP Morgan position and maybe even hit the closing value from Friday at 5581, pushing from big red to maybe slightly green. What's interesting is as we go up, the way this is set up is actually price is going to speed up because we're going to be getting into more negative gamma. And remember, negative gamma is slippy price action versus positive gamma, which is sticky price action. So price down here, sticky, no surprise. That's exactly where we bounced because the gamma got positive, and also it's a key level from a psychology standpoint, also from a option standpoint, from a technical standpoint. There's a lot going on at 5,500. Not so surprised we bounced there. A little bit of a fake out overshot. But as we speed up, this is negative gamma where price goes from sticky to slippy. So as we pick up, I wouldn't be surprised if we kind of just start going and the swings actually start to elongate. And I'm kind of just, I don't know, I'm watching this, but clearly this is all negative gamma because of this giant JP Morgan position. So remember, this is where things get a little funky, and the closer up to it we get, don't be surprised, especially midday where there's less liquidity, if we start whipping around a little bit more just because of low liquidity lunch, and on top of the fact that then we're then in negative gamma. So please be careful about that. But overall, it's just, once again, my goal here is if we continue with this bullish trend, which I'm defining by higher highs, higher lows on the intraday chart. I'm looking at momentum, bullish. I'm looking at the NASDAQ to try to push bullish. Right now, it is still technically bearish. And I'm also coming back to whatever the options flow is. Let me scroll up here. Right here, picking up ever since 946. Just the S&P 500, this delta is pumping. It all started by puts being closed out, and then not long after that, people started buying calls. So the maxed put delta was right here at 1051, coming back a little bit. I would be interested to see if calls start picking up during lunch to see how they want to play this. But just please be careful, because on these JP Morgan decision days, referring to their collar position, we see multiple percent movement swings, like a 1% drop followed by a 2% rally. So just be careful with that. And obviously, when I say be careful, make sure you are keeping your sizing in check, because your sizing is going to be very, very important. Just your base sizing should always be based off the concept of, if you're wrong, how much are you comfortable losing? That's really how you figure out your sizing from a high level standpoint. Of course, you could get into the math of I don't know, a third or a half a Kelly criterion, or you could look at ATR. Of course, there are more nerdy mathematical ways to break it. But I think, especially for starting traders, the thing you could do is do the math of, if you're wrong, where are you going to cut it? How much are you comfortable losing? And then size it accordingly. Do the backwards math to be okay, I'll size it here, because if we go down to that point based on this many shares or contracts or whatever have you, you'll be down that much. And that's how much you're willing to lose. I find that especially on the retail side, it seems as if the question of how much am I going to lose and how bad could this go if I'm wrong, it seems to be lower on the priority list. And if anything, it's visions of grandeur of oh, how much money can I make if I'm right? And really, your first, second, and third question should all relate to, if you are wrong, which there's probably a 50% chance that you're going to be wrong, how bad is bad? Size doesn't matter, Matt. Oh, it matters. It matters. I think a lot of people talk about trading strategies as if that's the end all be all to either get in or get out at the proper level, when in reality, that's 50% of the battle. You could have a great strategy, but if you have improper sizing, you're still going to blow out, even with the best trading strategy in the world. And I don't think there's a big enough emphasis on that of, yes, work on your strategy, superior entries and exits. But also the other thing you very, very, very much need to pay attention to, is what in the world is going on with your sizing. That's the other half of the battle that just does not get enough recognition. Does not get enough. Victim mentality always. Victim mentality. Yeah, I mean, that's it. What's the best way to learn about options? I mean, your ceiling is pretty much limited by you and your own curiosity. The amount of resources out there, even just the amount of free resources out there, you could spend all day on the internet consuming free information, and literally days and days and days of effort. So what's the best way to learn it? Is just to go out and start learning, start researching, because as you do it, you're going to get more questions. Then find the answer to that question. When you find the answer to that question, you're going to have more questions. It's just this spider's web of you're going to learn one thing, you're going to solve one thing, and then 5 more questions are going to pop up. And as you learn about those things, you're going to oh, okay, now I got to learn about this. And very quickly, you just basically keep going until you no longer have questions. And then you realize that you actually don't not have questions. There's just other things you haven't thought about. And eventually you're going to see a video or a tweet or listen to a podcast that brings up something else. And you're going to say, that's interesting. And then you go dive down that rabbit hole. Like anything in life, not even specifically options, like especially in this day and age, SPY, new intraday high, heading to my first target right here at 5,550. Like many things in life, the limitation is just self-imposed, especially now with just like how much information you could get. You could talk to an AI bot all day and just be like, literally, you could do that. Go to ChatGPT and say, create me a course to learn options. And it will create you within minutes a full-fledged course for yourself on options. So I think with there, it's not like an intellect thing. It's just a personal drive thing. It really, really is. It's just a personal drive. Like if you give a shit about this, if you want to make this your thing, you just have to become obsessed with it. And that's just a personal decision. Do you have it in you? Like, is this the thing that you're going to become singularly obsessed with? To make it in trading, this isn't just like a side interest or hobby. That's investing. Investing, you could check on it every couple weeks, every couple months, and you could be pretty successful. To be a successful investor, you really don't have to do the day in, day out type of work. To be a successful trader, like many other difficult professions in this world, you have to be singularly obsessed. I was born in the early 90s, and as I went through school, middle school, high school, and college, one of the most devious things ever was prevalent in the education system when I went through it. And what I'm talking about is when I went through school, there was this giant emphasis on for you to be a good person, to be an active member of society. They wanted you to have breadth of knowledge, breadth of experience. They wanted you to be quote unquote well-rounded. And if you do that, you're going to be a good member of society. And you're gonna maybe be interesting at like a cocktail party. And like, cool, maybe that's like what fucking floats your goat. I don't know. But there is no person in this world that has a high level of success. I'm talking about like the people that we listen to, the people who win the awards, the people who make a shitload of money trading, whatever their domain is, to achieve the highest level, they are not well-rounded. They are singularly obsessed to a disgusting degree. And in this game of trading, if you have no interest to dedicate that effort to it, it's just not for you. Go find the thing that is for you. Obviously, it's the thing for me, but just because it's the thing for me doesn't mean it's the thing for everyone. But whatever happened in the school, and like I think that is so fucking devious that we were always pitched this concept of be well-rounded, be well-rounded, be well-rounded. That is how you win. That is not how you win. Every person who is well-rounded is going to be playing second fiddle to the person who gave a shit about nothing else besides that thing. And I think if you're a person who's like, yeah, no, like I want to do that. I want to be obsessed and spend 24/7, all of my like waking thoughts thinking about trading. Yeah, you're going to be successful. And at the end of the road, you can make a lot of money. It is there. But also there's such like extremely negative times that, and this is with anything, not just trading. If you want to be an entrepreneur, if you want to be a soccer player, like whatever, it doesn't matter. Like we're just talking about generically you picking the thing that you're going to do. There's going to be so many hard times that you have to make sure you have it in you that that's your thing, that you need to have enough of a passion for it that it carries you through those hard times. Because even if you absolutely love it, even if you're immensely talented, there's still going to be those times that you're sitting there and you're like, what the fuck am I possibly doing? And the only way to get through those hard times, once again, whether it's trading or sports or school, or if you want to be a doctor or a lawyer, or I don't fucking care. I truly, deeply believe that you're going to have that innate passion for it to get like to carry you through all those learning curves and the downturns and the rough time and the schooling and the cost and the tuition or blowing out your trading accounts. But you just have to pick your thing. Like you do. Like it hit me in college of how much I fucking hated it, because like in college I cared about coding and I cared about trading, and that's all I wanted to do. If I could spend my 18 credit hours per semester just learning about trading and coding, I'd probably be better off in life, and it's all I cared about. I remember sitting there in every other gen ed class, like you had to do multiple gen eds, a semester to graduate from Penn State. You had to have all these gen ed credits, and all I could think about all the fucking time was I was sitting there, I was like, this is a waste of my time. Every single minute I put into doing homework for this class, research, reading books, I was like, I just don't fucking care. I don't care whatsoever. And it was just hours of my life learning about a thing that I give no shits about. Well, not only did I now have knowledge in that time, but it also took away time from what I actually like legitimately wanted to do. And I actually think because of that, this isn't like that well discussed, but I think that's part of the reason why no one gives a shit about college, is because it's so absurdly expensive. And not only is it expensive, but then you're forced to do classes and attend things that you just don't give a fuck about. You're like, this is just an actual fucking waste of time. And whatever, like I said, I think this is, I mean, I have no proof of it. Obviously, this is just my personal opinion. I think if you're a well-rounded person, great. You're probably going to have an awesome life. And I think that works for many, 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 many people. But for other people, especially if you're in any way endeavoring in a solo thing, the quickest and most reasonable way for you to have success is by doing nothing fucking else. Nothing else whatsoever. That's it. And then guess what? You show up and you fucking do it. And then you do it, and you get tired and you take a break, and then you wake up again and you do it. And then you just do that time and time and time again, every single season. No ifs, ands, or buts. You just do it over and over and over again. You're going to have good times. You're going to have bad times, but it's like more this longer picture thing. So whether it's trading, and I honestly think you could apply that to any aspect of your life. If you want to be a fucking musician, just do nothing else. Literally just do fucking nothing else. Just always be smashing the fucking keyboards and go and go and go. And then go and go and go. That's it. And speaking of that, we are coming up to, speaking of going and going and going, maybe the bull camp really getting jacked up by these words of wisdom today. We're going to this first major target of 5,550. I want to be very clear. This is the zone I give a shit about today. And how is that actually going for me right now? How is that actually going for me? Oh, you guys can't see it. This one's cooking up about 5K. This was called out in real time. Ask anyone in the Discord. And then I'm also in this position, which is up another 2K. So up about 7K after locking in a solid 40 this morning. So I have a little bit of a runner position. And obviously, if you're interested in that stuff in real time, that's exactly what the Discord's for, because none of it's Monday morning quarterbacking. When I get into the trade, I post it. When I get out of the trade, I post it. It's not like I only post at the conclusion of the trade. So by doing it that way, inherently, everyone knows like if trades are going well or not, because they know exactly when I got in, and a little bit of a basic arithmetic, you could figure out how the positions are in real time. So once again, none of it is Monday morning quarterbacking, but most importantly, shout out to Public. They are the partner of today's stream. That's the brokerage on the screen right now. I like it so much because of the rebate. Right here, there is no other brokerage that you earn a rebate when you trade options. There are no commission fees. There are no per contract fees when trading options. And then on top of it, you get a rebate. No other brokerage does that. If you're an options trader, aspiring options trader, this is the brokerage to be on. In my humble opinion, it is by far the most friendly to any options trader out there, just because no other ones are giving rebates. So technically, you're net ahead even on a scratch trade, which I think is the coolest thing. Think about that. Think about what that conceptually means. Every single time you trade an options contract, you even break even, you're actually net ahead. So for example, let's say you get into SPY for $1, $100. You could just get in and out at $1, $100, like 1.00, obviously multiplied by 100. You could get in and out $1 all day, and your account would actually be growing because of the rebate. So that's actually a whole nother strategy that I like there, because even when you are trying to be protective, you're like, hey, maybe I have a lotto runner, maybe whatever. Even if you put your stop at break even, you know you're making money because of the rebates. I absolutely love it. So I think you guys should all check it out. And remember, if you want to start at a higher rebate tier, Public charges me transaction fees. No, Public doesn't charge you transaction fees. There are transaction fees from European contracts from the OCC. but that's not public charging you. And so you get a higher rebate than what the transaction fees are. But once again, they're not charging it to you. It even says it. You could just read it. It's the OCC. It's the Options Clearing Corp. It is not a fee generated from public. But once again, you want to do the math on the rebates versus that. But what you're referring to is like uniquely specific to the world of European style contracts. Things like SPX, NDX, VIX, RTY. You're not going to see those in American style contracts such as SPY, QQQ, Tesla, Apple. All those are American style. I think sometimes it gets confusing. I don't know why they're called American and European style. It has nothing to do with America or Europe or whatever. It's just a different style of options contract. European style contracts, in my opinion, are better, even though there is a fee associated with trading them from the OCC. Actually, that one might be from the CBOE or the CME, one of the exchanges that hosts it. There is no early there's no early exercise, so there's no risk of margin call, and they're also cash settled. So that is why I like European style contracts better. But once again, there's like when you think of a company, Microsoft, Apple, Tesla, that type of stuff, there's no European contracts for them. They're all exclusively American. You can only find European style contracts for the overall market, like the S&P 500, the NASDAQ 100, volatility, VIX, and that's where European style contracts stop. So that would be the major difference between SPY and SPX. So they're both tracking the S&P 500. SPX is the legit S&P 500. SPY is an ETF created to track the S&P 500. But SPX, if you're trading an option, that's a European style option. While if you're trading SPY, that's actually an American style option. So if you're trading SPY, you could get margin called. There could be early exercise. There's differences in like when they expire, this, that, the other thing. There's nuance differences. They're pretty much like the same shit. But those nuances do make a difference, especially if you're trading 0 DTEs. What's the benefit of cash settled? Same day settlement? No. Cash settled, the fact that it's cash settled and not asset settled means you're not going to get margin called. So if you're trading something like a spread, like a call debit spread, call credit spread, or put credit, put debit, if you're trading spreads, that's where you're probably going to majorly see it, is because you are not going to get, there's no margin call. So the way you get closed out of your position at like 3:30 when you're trading spreads on whatever, any of these brokerages, it's because they're worried about what's referred to as pin risk, as if it expires in between your two strikes. That doesn't exist in something like SPX because it's cash settled. So it's just the financial difference and you don't have to deliver the underlying. But like I said, that's getting a little bit nuanced. All right, folks, that's what I have for you. Check out Public. Make sure you use that link. That's how you're going to start off at a higher rebate tier. And then don't forget, Apex's deal is ending today. I think you have about 14 hours left. So if you want 80% off, use that code Goonie on Apex. And then also, with respect to Public, it's pinned to the top of chat. It's in the description of the video. My mod will drop it in chat. That's what I have for you right now. We'll be posting an update video later on today. Just be careful. The remainder of the day, I do want to call out that the last time we've had to focus on these JP Morgan days, as I'm referring to it, there's been a lot of late day movement. So if you looked at what happened last time around, that might have been the September one. If you look at one of the most recent ones, around 1 or 2 p.m., there was a giant sell-off followed by a giant rally. And it all happened in the second half of the day. So please be on your toes for that. Highly, highly, highly recommend that you pay attention to what's happening with active options flow. So use a tool like Spot Gamma where you can see Hero and see what the hell is going on, because I am fully anticipating fireworks at some point this afternoon. So please be prepared for that. I'll post the update video today to let you know how the option structure changes. And then tomorrow we have some employment numbers. And then on Wednesday, that's going to be the really big day, aka Liberation Day, where apparently we find out more about tariffs and whatnot. So be ready for that. There's definitely craziness and chaos on the horizon. So please make sure your sizing's in check. Make sure you're respecting your risk and basically don't let yourself spiral. Don't let yourself go on tilt. That's what I have for you now. I'll see you in the update video, and then we'll be streaming once again tomorrow. And of course, if you're in the Discord, I will see you there in a little bit. That's what I have for you. I appreciate the good vibes. Peace.